Consumer staples refer to everyday products that people need. The sector typically performs well during market downturns. Here we'll look at the best consumer staples ETFs. The consumer staples sector tracks companies whose primary businesses are based around food and beverages, hygiene products, household items, etc. Things that people need on an everyday basis. Think Procter Gamble, Coca-Cola, General Mills, Johnson & Johnson, etc. Demand for products in this sector remains relatively constant and is non-cyclical, and consumers are usually unable or unwilling to stop buying these products. Demand for some staples even increases during recessions. Consequently, revenues for these companies are relatively steady even during market turmoil. As a result, this sector is typically more insulated than others during market downturns. As such, they are considered defensive stocks. These stocks are also less volatile than the market as a whole, and have a comparatively low correlation to the broader market of roughly 0.60, offering a potential diversification benefit and volatility reduction from overweighting consumer staples in one's investment portfolio. Dividends from consumer staple stocks also tend to be healthy and steady, making them attractive to dividend investors. Consumer staples are an attractive sector for those seeking steady growth, healthy dividends, and low volatility. Here are the 5 best consumer staples ETFs. First on the list is XLP, the Consumer Staples Select Sector Spider Fund. XLP is the most popular ETF for this market segment with over $14 billion in assets. The fund seeks to track the S&P Consumer Staples Select Sector Index, composed of consumer staples stocks in the S&P 500. This ETF has 34 holdings and an expense ratio of 0.10%. Next on the list is VDC, the Vanguard Consumer Staples ETF. VDC is next in popularity with over $6 billion in assets. The fund seeks to track the MSCI US Investable Market Consumer Staples 2550 Index. With over 90 holdings, VDC provides broader diversification and comparatively more mid and small cap exposure than XLP. This ETF also has an expense ratio of 10 basis points. Next on the list is FSTA, the Fidelity MSCI Consumer Staples Index ETF. FSTA is somewhat in between the earlier two in terms of exposure. This ETF is the cheapest on the list with an expense ratio of 0.08%. The fund seeks to track the MSCI USA IMI Consumer Staples Index. Fourth on the list is KXI, the iShares Global Consumer Staples ETF. The previous 3 ETFs only target consumer staples stocks in the United States. If you prefer to access consumer staples globally, KXI is roughly 50% exposed to the US, with the other 50% in foreign holdings around the world. The fund seeks to track the S&P Global 1200 Consumer Staples Sector Capped Index. This broader diversification comes at a cost though. This ETF has an expense ratio of 0.43%. Last on our list is RHS, the Invesco S&P 500 Equal Weight Consumer Staples ETF. All the previous ETFs on this list are market weighted and are thus overweight in a small handful of holdings. RHS is equal weighted, so each company in the fund gets equal exposure. This results in much more exposure to small and mid caps than the previous ETFs. The fund seeks to track the S&P Equal Weight Consumer Staples Index. This ETF has 33 holdings and an expense ratio of 0.40%. Some of the links below are referral links at no additional cost to you. If you choose to make a purchase or sign up for a service, after clicking through those links, I may receive a small commission. This allows me to continue producing high quality content on this channel and pays for the occasional cup of coffee. I have first-hand experience with every product or service I recommend, and I recommend them because I genuinely believe they are useful.